Good evening. I'm Epstein, and here we are with your SPDR-ETF stock market wrap-up. And this wrap-up is for the evening, as we're here on Wednesday, the 17th of January, 2024. Well, you know, I've got a sale going on the SPDR-ETF research, if you're interested, along with the futures. I so often tell you, sit back, have a cup of coffee, watch what I'm saying here, and I decided to go out and price coffee. So on the 11th of January, basically 6 days ago, I went out and I priced in my zip code in Chicago, Starbucks with taxes, 408, Pete's, Dunkin' Donuts. Then add a tip to it, right? I hope you're a good tipper. And you're going to be $4.50 to $4, something like that in most cases, I don't know. So I said, you know, I can cut the price of my introductory offer for 72 hours. You have tomorrow left. That's it. It ends Thursday at midnight, Central Time, game over. So you won't be able to get this deal again. And I said, it's the beginning of the year. I want to prove myself to you, but I'm not interested in all the freeloaders. If you want to spend a couple of dollars to see what I do, I want to give it to you. And you'll get it for 30 days. Now, let's understand, if you have that cup of coffee, within 6 to 8 hours, you're going to the bathroom, it's gone. I'm there, like it or not, for another 29 to 30 days, 22 business days. You're going to get 15 to 18-minute video showing charts all the way through. Each subscription allows you to write me, ask questions. I generally create a 30 to 1 minute long video, review the chart you're asking about, and send it right back to you. I only devote a certain amount of time each day to that, but I do it when asked to do it, and I think you'll find it fascinating, all that you get for this. Now, it will revert to my normal charges, but you go into the members login. If you want to quit, you quit. If you want to stay with it, you stay with it. Just let it renew itself. I mean, we're really talking in the scheme of things, in most cases, not even a tick in your trading. And to get these two for that price, what are you talking, $8? If you do both of them, it's a pretty good deal. If you're doing cappuccino, this is a freebie. Think about it, all right? How do you get it? Move your cursor to the top up here. You'll see an icon, or go to irapstein.com, go under the research area. All right, the more I look at what's going on, the more I'm convinced that what the market is trying to do is first digest the gain from October 25th to 27th until Christmas Day, and then the small pullback that began in the market. Have we broken enough to say we've broken the back of that run? Not at all. That's my opinion. Have we had a big correction? In most cases, no. Is the market a little nutty in the head, looking for earnings that aren't going to be super steady all the time? Yeah. A great case was Interactive Broker today. I'm watching and I'm reading their numbers. And believe me, I'm a chartist, not a great analyst on the numbers. That is not my forte. I leave that to the likes of Warren Buffett and other great analysts out there, many stock people. But I looked at it and I said, if you look under the thing, and the reason I liked Interactive Broker, I'm a broker. I've owned companies I've sold, things of that nature. And I said, wait a minute here. This looks great. I don't know why people are beating this up. That's not reason for me to be a buyer, but it's reason for me to question the market. We'll get to the chart and you'll see what I'm talking about on today's action. When I look at other parts of it, you know, Tesla's again cutting prices. I don't know if you saw what they're doing in Europe. Very aggressive price cuts, not small dollars, big dollars. So as they keep doing that, the market's falling out of favor. Wasn't this a $260 stock just recently? That's not a small break. And if they keep doing this, what happens is, to keep their market share, they're just becoming another automotive company at this point. But as they go, GM will fall, Rivian's getting hurt on this, Lucid's going to get hurt. All of them get hurt because the leader, if he's cutting price, what's it mean for their business? I'm watching today with fascination as the stories in Chicago have broken out, and they took the camera crews and they went to the charging stations to show you how frozen they are and people can't charge their electric cars. This is an infancy business. And the big money people went out and bought their electric cars because they were the first in the neighborhoods to do it. Hertz thought, as you know, that everybody'd want to get an electric car, come in and rent it, because it is quite an experience. I've been in them. I don't own one. I have been in them. I love them. I don't like them. I love them. I also don't want to own one yet. And the reason is I do drive with my wife to her family in Indiana. You can't find service charging places easily. I'm sorry. What if something goes wrong? What about repairs? Who am I going to call to fix it? I don't even know that AAA knows what to do with them other than tow them. They're certainly not charging them. At least I don't think they are. It's just not for me yet. But I think that's what happened with Hertz. People came and they tried to give them these cars. And I went to Budget recently. Nobody offered me an electric car. I probably would have taken it because I was in Boca. And there's plenty of charging stations around there. I saw that. I didn't get offered. I wasn't going to pay a premium for it either. I am frugal. And I said, wait a minute. Now Hertz is dumping these cars. Same thing. All right. So there's one thing to understand. This is where automotive products are going. I don't know if charging stations are the right thing. I love the idea that you pull into one of these crates and robots come out and they take the battery out of the car, they swap it, and on the way you go for within 5 minutes. But how many of those so-called crates, as I call them, can there be all over the country? In China, they're prolific. So different ways, new industry, I get it. So I'm looking today at Interactive Broker get beaten up, and it did. I mean, look at the range, 90.40 to 83.87. It's a big range for the market. You had these spikes before. And I'm noticing the big spikes in this market happen to attract interest in it. I didn't say buying, I said interest. Late in the day, this is a big outside day up. In order to say that there's something wrong with the stock, you got to take out today's low again. So when I look at it on the swing line, I have a lower low, a higher high. I hadn't had a trend anyways that I cared about in the market. What did it fall down to? You tell me. I'm going to carry you back just a day. As a chart analyst, okay, no trend. I got a higher high, I got a mark. Well, actually, I had higher highs right through here. Earnings coming out. That's not completely true. If it stops, if it drops from here, I probably am going to look real hard at 85.11 to 84.86, but it's not a buy there. Why wouldn't it be a buy there? Question and answer period. Tick tock, tick tock, tick tock. IRA. To get down there, you got to take out 86.53, which means you'd have a higher high and a lower low. So the buy number's out of sync with the market. It's not buying when you've got higher lows, higher highs, and where your buy spot is keeps that pattern. You break the pattern if that happens. If that gives ground, then you've got the 200-day average. So I feel secure that this could be a support area, but not a buy area. Two very different things. Let me come back. I think I went too far. I did. I want to come back here with it. And there we are. All right. So there's the moving averages. All right. And let's get over here and bring it up to date this way. Here's the break today. I just hit the wrong button. 83.50 is the 200-day average. You hit 83.87, certainly hit these two numbers, and then you came roaring back at the end of the day. So somebody along the way said, oh, I think something else is going on here. Well, I think they looked at the numbers that came out, did the analysis, and that's what they came up with. But why did it stop the rally there? The Bollinger Band's 90.61. Probably the reason. So you had a market that had a rally. I look for resistance tomorrow at 90.61. Is there a trend to trade here? No. Plain out, no. There's no trend at work right now. You have an overbought market. Couldn't stay down on the break. Probably going to have great trouble on the rally. When we come to Cameo Corp, which is CCJ Uranium, you don't buy over upper Bollinger Bands from my perspective. You can do whatever the heck you want. Why? 95% of the time you'll trade within the black bands, the Bollinger Band. So you want me to buy out of it because this is the one time. It's not going to work that way. I know it. That's how they build Vegas, all right? They build it because all you think that this is the one time I'm going to get it. You go to Vegas to lose. You go there to have a great meal, get entertained, dress up, have a ball, drink, whatever your thing is, entertainment, and that's what it's about. It isn't about winning. Well, in my opinion, buying over Bollinger Bands or selling under Bollinger Bands isn't about winning either. That's the best analogy I can give you. The odds on play are when a market gets up to the upper band, some money comes off the table. When it gets down to the lower band, some money comes off the table. How you play that, I teach in my courses. I teach also in, obviously, my coffee. All right, my coffee what? Your subscription video. Again, if you want that, remember, move your cursor up here. Go to iraepstein.com. Under the word research, it'll all be there for you. All right, so that's what I teach, at least in the marketplace. Then I come to UGA, the gasoline fund. Does this look like a trend to you or sideways action? I see sideways action, just visually. Market's got a lot of resistance with the 100-day average in green, the 200-day average in gray, and the Bollinger Band. It's got support at the 18-day average, and on breaks down to the lower Bollinger Band, it continues to find support. But it's going sideways. Sideways churns your account. You want it to break out of this one way or the other to get a move. Here. You finally tried the upside. But again, it didn't go anywhere because it made you buy over the band. You don't do that. Then it started breaking out to the downside. And it stayed right on that band all the way down. A hard market to trade, no question about UGA. I don't think it's an easy chart for one to trade off of. I think gasoline futures are so much easier than this chart. In XLF, here too, we are fighting a battle in sideways action. Why? I'm going to give you the 2-second answer. You went from the end of October straight on up, and you've already built into it all the good. You think you're going to get another 20, 25% gain in these markets this year? I wish you the best. I think you put in a tremendous amount of gain in the last 60 days. I think that gain either gets consolidated or corrected a bit. One of the two. I think buying and looking for the market to continue up right now, I think it's fool's play. I think that you've counted and built into the market, you being the marketplace, not you individually. The marketplace, the Fed's cutting in March. It's going to go right through the end of the year. 1.5 points is coming out of everything. In order for the Fed to do that, they have to be fearful the economy's turning down. Do you see any reports that warrant that yet? I see manufacturing as weak. I don't see the service sector. I don't see labor as weak. Retail sales are stronger than the market thought. And earnings, well, they're coming out. There are some misses by 2 cents, 3 cents. There aren't a lot of misses. But the market's already built in so much, can you advance off of it? That's the problem, I'm wondering. In the industrial sector, I did not get this whole rally. I mentioned it every day here with you as these reports came out on the Empire State, the Fed, when the Richmond Fed, Chicago. I said, why is this market rallying? There's no industry. I mean, it's not growing. And now the market's backing off a little. People were anticipating, this is probably the greatest one to explain. Obviously, manufacturing will pick up if interest rates fall enough and you spur on demand. Isn't that the whole idea of lowering interest rates to get demand going? Well, the Fed still isn't convinced it's beat inflation, and you want me today to believe that they're ready right away to cut rates. I'm not in that camp. I think the market's got it wrong. Do I think it's coming this year? Absolutely. Do I think the lag effect will hit the market? I do. Do I know when? I don't. Do I think it's in the first quarter? I don't. I think they want more proof than that, according to what the different Fed governors that keep coming out say. That's what I'm basing this on. If I heard them all say, we're there, I'm with them. These guys are way smarter than I am. Probably way smarter than you are. And they're not saying that. They're saying, let the data prove it. We've still got an economy that's pretty strong. That's what they're saying as a group. Pay attention. AMC, you don't need me to tell you. I'm so sick that this is happening to this company because we all love a movie theater. They just don't have any product. They'll get it. They'll find a bottom. Could be a $4 stock that finds the bottom. I don't know. We'll see where it comes alive. RSPD, the consumer, well, he carried this whole move for the year. Now he's in a corrective stage. How much deeper can he fall? You know, if you think about it, and you went from 38 up to, let's call it 45, and it had a half correction of that. That'd be $3.50. So that would carry you to about the $42, $43 range. Why not? I'm not looking at the whole year. I'm looking at this gain. That can happen. I'm not predicting it'll happen, but it can happen. Why not? In the home builders, I'm not bearish these. There's demand. Let me look. Oh yeah, the first four, nice weather in March. We're all going out there. Martha, you need a house? We're all going to be looking, especially if interest rates stay on the lower side. There's just big demand still there for people that can afford it. These are called home builders, not resellers. They're going to build you your custom home. I think they're going to have a good logbook, but it's sideways for a bit. They've had their run. They had a beautiful run. These were $60, $70 shares that now they're up here and they're consolidating at 93. Come on. All right, this is a big run. In the energy sector, I don't know. I'm still not buying what everybody says. You need demand to pick up for things to go. Here's a concern. The Houthis keep firing. The missiles some are making it through, hitting ships now. We're firing back. Oil prices aren't rallying. And production out of the U.S., other countries, is still picking up. You have a huge difference today. They came out in OPEC with their idea of what demand and supply is going to look like for 2024 versus the IEA. I cover that in my full research tonight. I've already written it up and given the analysis as to what that is. Suffice to say, the market is still betting on the bearish bet. You could be taking crude into the 60s, basis Brent. I mean, this is the bullish news right now, and you're not rallying, so you always got to be a bit careful of that. In the gold market, gold is a sideways market and has been stuck as a sideways market since November. Do you call this a market that's moving? If you do, go to your eye doctor. In SLV, you have a higher high and a lower low, and the market is oversold. Silver's been weaker than gold. It can still drop away here. It's not as sideways a market as gold has been. In the copper, they call this Dr. Copper. It's not a shoe brand, it's Dr. Copper. Remember Dr. Martens? Dr. Copper. And the reason is copper often leads industry. Demand comes on, the people are buying it. Well, the biggest user of copper has been China traditionally. Who wants to do business with China right now? Number two, they've turned inward China to make the consumer the demand. It isn't working very well. Number three, they need to do something to get their economy going, and they haven't done it. They could be waiting for March to get this done. Traditionally, that's what happens. And the copper market has taken a beating in the process. We keep hearing that the mines aren't going to produce as much and so on. When you hear supplies cut and the price is still falling, it's obviously a lack of demand, both from the West and from China. BND, sideways action. You think that's a trend in here? I think it's just sideways. Oversold down to the lower Bollinger Band. You had hit the upper band area the last time in early December, then you fell back. You haven't fallen. You haven't rallied. You're just sort of drifting sideways right now. And in the dollar, well, you've had a rally now to the upper Bollinger Band. You're overbought. Could the dollar be headed to the 103.90 level on the futures? It could. Especially if interest rates get goosed up for any reason. So you pay attention to that. And you look at the same time at FXE. But today and yesterday were where the pros, actually today was the perfect day for the pros to cover against the lower band and say, I don't think I want to be short that stock anymore. And I think that's what happened with FXE, the ETF on it. So you put it together, you come up with a game plan. I've given you one. You have 24 hours left to take advantage of this. Move your cursor up here, go to iraepstein.com, and after this is gone, well, that's on you. I'm Ira. You have a good day. I'll catch you all first thing in the morning with my morning flash videos. Take care.